Hi guys, welcome back to SS Forex Academy. Hope everybody's doing well. Yeah, I thought I'd just break down Friday's trade on Nasdaq, where we incorporated a bit of Wykoff to catch 1,800 pip of a climb. I'm currently still holding, and yeah, let's just get straight into it. Okay, so on the weekly time frame, we know that obviously price has respected the support at 15,687. So yeah, we obviously only would be looking for buyers. If I go down to the daily, yeah, so we've got a clean rejection of that area in the market, that being support currently. And yeah, like I said, our bias is bullish, so we were actually stalking that re-entry onto that buy after this corrective phase here. So I did catch a move last week from here. It was about 3,000 pips. We caught 3,000 pips on the on my mentorship group as well as my signals group, and yeah, it closed as soon as we got to the resistance. Okay, so like I said, this was the impulse. We had a bit of a correction happening here. If I go down to the 4-hour, okay, so 4-hour, on the 4-hour chart, we know that we had this beautiful double bottom at the bottom area here, and then we saw price start correcting in this manner up here. So we had a bit of a correction there, and we were obviously looking for that buy. So on the 1-hour chart, we marked our area of demand. So we had an area of demand that was sitting area here. Okay, so we had an area of demand at that area in the market, right? Gave us that correction. We saw that, okay, fine, we've got a pin bar that's rejected off this demand area, right? So it is our first indication of taking this buy, right? So obviously we need to find more confluences now, and that's where I flipped to the 15-minute and noticed the following. Okay, so on the 15-minute chart, we watched price basically leave an area of supply here. So it mitigated an area of supply, came down, gave us an impulse correction, and then your next impulse, and then the correction. Now, important thing to note here is the manner in which price corrects. So as you can see, as we approach the demand area, price obviously starts to reject, and then also you can see more of a presence of buyers in the market currently, right? So your corrections would start getting bigger, right? So if you look at it again, correction, impulse, correction, right? So look, small corrections. These are about 30% corrections. We approach the demand, tap into demand, we reject demand, and then once we reject demand, we can now see that the correction is about 70 to 80% of the impulse. So that already to me is signaling that price has obviously picked up buyers in the market, and there's now a shift in momentum that's currently occurring. And why do we have a shift in momentum? We can see that, okay, price now changes character at that area. So let's just mark this off as changing character here. So the changing character at this area in the market. Why? Because we have now taken out the previous lower high in the market, right? So let's replay that from here. Okay. So we mark this area as your, so this becomes your preliminary support, tapped in, where prices obviously tapped into the demand area, rejected, but then obviously pulled back into that area, creating an area of preliminary support in the market, right? So the whole purpose of what we're looking at here is, the whole purpose of this accumulation is obviously to get rid of sellers in the market. And as you can see, this starts happening here. So we've taken out the preliminary, I mean, we've prices obviously rejected demand, come back into demand, giving us a selling climax down here. So we got a selling climax there. And we've got an automatic rally where we've got the 70 to 80% correction, which happens at there. So you got your automatic rally here. Okay, now gives us your secondary test, which is here. So this is a beautiful example of a clean Wykoff schematic, purely on the 15-minute chart. So we've got our secondary test there, our ST is there. Okay, notice what happens now. Okay, so that. Okay, this area you could have marked off as your spring. We had another 15-minute area of demand in here. So we could have marked this area off as spring. Okay, price comes back, test the spring. Okay, so we've got a beautiful test of that spring, and price has obviously now bounced. So now we would be looking at structure to obviously break up here. So you would need a POS up there. Okay, now your new area of demand becomes this area here. No, however, notice how price leaves this area without tapping into this demand. So that's an area of, so that to me is an unmitigated demand area, or unmitigated IFC, like I'd call it. So price obviously needs to now come back in. So we've changed character first, and then we've broken structure, leaving us with what we call a, so let's just do this. This area here is actually called that's a banker block, right? So that's something I teach you, I teach my students. Okay, so that's a banker block. You know, the price obviously still must come back down to this area again. And this was basically the setup. You're going to put your stop loss below this area, or below your new zone that's formed within that 1 hour demand zone. And your target here would have obviously been, could have targeted previous highs. Let's put there, right? Okay, so basically, yeah, that's all you need to know on when it comes to a Wykoff schematic. The purpose of an accumulation is to get rid of sellers in the market, and that's exactly what happened here. You saw that we had we had impulses on the 15-minute to the downside, with small corrections that happened here, and then as we approached demand, obviously the corrections got bigger, and we had a shift in momentum. So sentiment of the market has then changed. You had the clear change of character. You had a secondary test. You had your breaker structure, and then you had a spring which left a banker block behind, where price had to obviously come back down to mitigate that IFC. So now it's just a matter of waiting for price to come back down. So it comes down and bang. clean entry with, so yeah, if you took the setup as is, that was probably a 1:, yeah, that's a 1:17 risk to reward. And it's currently still playing out. I'm still currently in this trade and I'm still holding. So yeah, we're about 1,800 pips up currently. And it's as simple, basically as simple as that. If you go down to your 1 hour, that's all you were doing, stalking the next buy after the correction. Why? Because your 4 hour already gave you that impulse from that weekly and daily support area. So we had the impulse, this was a correction, and we just got in on the accumulation at the bottom of that correction for the next impulse to the upside. And yeah, the signal was obviously sent out to my Discord group. So just load it quickly here. Sure, Discord's pretty slow. Oh yeah. Okay, so I'll go to the trading room. It was sent out on the Discord and actually on the Telegram. Here's the proof of it. So it was sent out. Yeah, it was sent out on the 12th. I mean, on the 10th of the 12th, which was Friday. Set up as well as signal sent here, 3:14 p.m. And here's proof of the entry. Okay, there. That's proof of the entry. And here's where we are currently. So like I said, I'm still holding until, yeah, until I reach my target area. So yeah, if you enjoyed this video, feel free to like, comment down below, give me some ideas of what you guys would want me to go through next in upcoming videos. Also feel free to drop by on my Instagram. You can give me a follow. It's Shakil_ss.forex. Yeah, I'll drop some free nuggets there as well. And yeah, catch you on the next one. Take it easy. Bye.